Today was a really bad day for the entire crypto market, including Dogecoin. Everyone lost a lot of money. In this video, I'll examine when and if we'll go up from here and all the new data that supports my predictions. Before we talk about the bad news, let's talk about some great news that came from Elon Musk today. So, earlier today, Elon showed support for Dogecoin's Web69. Basically, a Dogecoin user, Wandering Star, said in a recent tweet, "If Jack and Bitcoin can create Web5, then Dogecoin can create Web69." The tweet caught the attention of former Twitter CEOs and Block founder Jack Dorsey, who tagged Elon Musk while replying, "Your move." To that, Elon replied with a fire emoji. Another good thing that happened today was that Glauber Conte-Soto, the very famous Doge millionaire, came out today to show support for Dogecoin. We know that he's rapidly losing his riches because Doge's value is dropping. CoinShares statistics showed that 3.1 million worth of Doge was liquidated in less than 24 hours. And even despite that, he said that he hasn't sold even one Doge from his holdings. Now coming back to the crash, we know that almost all cryptos lost a lot of their market cap. After that happened, a lot of analysts came out to increase the FUD in the market. Peter Schiff said that this could be a rough weekend for crypto. Bitcoin looks poised to crash to 20K and Ethereum to 1K. If so, the entire market cap of nearly 20K digital tokens would sink below $800 billion from nearly $3 trillion at its peak. Don't buy this dip, you'll lose a lot more money. But then there was a lot of new data that suggests otherwise. A new study from one of the biggest accounting firms, PwC, is revealing that the majority of crypto hedge fund managers anticipate a rebound for Bitcoin this year. Also, a survey was conducted by digital assets manager CoinShares in Q1 2022, focusing on crypto hedge funds and excluding crypto index funds and crypto venture capital funds. Data from the study shows that even though the crypto winter was already ongoing at the time of the survey, hedge fund managers remained extremely bullish on Bitcoin. The survey said, all respondents predicted that Bitcoin would end the year above the prevailing price, with the median prediction of Bitcoin price being 75K. The majority of predictions were within the 75K to 100K range, with another 35% predicting the Bitcoin price to be between 50K and 75K by the end of 2022. The respondents were also optimistic that by the end of the year, crypto's total market cap would exceed the 1.5 trillion level. The report said, fund managers were also bullish towards the crypto market cap changes in the upcoming year, with over 97% of fund managers expecting the market to finish the year significantly above current levels and with the median predicted level at 3 trillion. Most forecasts ranged between 2 trillion and 3 trillion. The point is that there isn't as much FUD in the market as we believe. It's just that some institutional investors are trying to control the price. Moving on, comparing Bitcoin to gold, Vanek stated that buyers see Bitcoin as a complement to gold. Bitcoin will go to half the market cap of gold or 250K of Bitcoin. However, that might take many years. It's arduous to place a time frame on it, and its institutional adoption is rising yearly. It isn't simply institutional buyers, but additionally, governments worldwide that need to see it as a helpful asset. My base case assumption is that it'll take a spot in portfolios just like silver's historic function. Gold was the first asset, however, typically folks purchase silver or different treasured metals. Individuals searching for a retailer of worth will look to gold, but additionally to Bitcoin. We're within the center phases of that adoption cycle, and there may be additional upside. He then talked about the SEC and the whole ETF situation, saying, the SEC doesn't wish to approve a Bitcoin ETF till it will get jurisdiction over the underlying crypto exchanges, which has to occur via laws. Now talking about regulation, there's some very good news that came out today. So representatives of relevant institutions in the European Union are approaching consensus on the markets in crypto assets proposal aiming to introduce union-wide rules for the crypto industry. They revealed that the French presidency of the EU Council and the European Parliament are now optimistic about resolving the issues that are holding up the draft's advance. Negotiators should do that at two upcoming meetings, on June 14 and June 30. Officials are still discussing how to limit the use of stablecoins in payments. For example, there is an idea to introduce a ceiling for transactions that are not denominated in euros. It comes after last month's collapse of Terra Luna. A key element in the negotiations is also the need to address the environmental impact of crypto assets, and some European lawmakers insist that the new legislation should take it into account. Now coming back to data, the co-founders of Glassnode said that institutional investors are loading up on Bitcoin as it trades below the 30K level. In Glassnode's latest newsletter, Jan Happel and Yana Lemon say that weekly crypto inflows show that institutional investors are gobbling up Bitcoin as it continues to flash signs of weakness. They said, "What is interesting to observe is that the demand for Bitcoin exposure in traditional markets strengthened. Following Bitcoin's 69 million inflow noted at the end of May, the capital flows nearly doubled last week as institutional investors bought into weakness at a discount." While the Glassnode co-founders say that Bitcoin is witnessing weaker demand from long-term holders on top of selling pressure from short-term holders, they highlight that Bitcoin is faring better than altcoins given the current market sentiment. They said, "A similar appetite was noted in the VC market, as the year-to-date capital raised is at 63% of 2020. This continued acceleration in VC interest reinforces the narrative of Bitcoin and crypto as an alternative risk-on investment class during a time of debilitating economic growth, which is impacting the expensively valued earnings of the Nasdaq and S&P 500. Keep in mind, even when Bitcoin's price behaves like a tech stock's price, Bitcoin's underlying structure of an incorruptible, limited asset that is open to every individual is a fundamental diversifier for any portfolio, and institutional investors seem increasingly aware of this. Now, all this is good for Dogecoin because the correlation between the two assets is really high right now. Coming back to Dogecoin creator Billy Marcus shared his view on the popular belief about cryptos being an inflation hedge. He said he believes that it is nothing but marketing and that people mostly trade or hold crypto because of its hypervolatile nature. I think he's forgetting that despite the massive drop in value and the rapidly decreasing value of digital assets, most of them still perform better than alternative inflation hedges like gold or commodities. Relatively speaking, your investment in Bitcoin 10 years ago would have brought you thousands of % of profit, easily beating gold and other inflation hedging tools. About the inflation issue, the CEO of Coinbase explained that Bitcoin could become the new global gold standard. He believes that the digital asset can revamp America's fighting chances against the oncoming challenge from China. Armstrong also shared his view on Ray Dalio's theory, explaining that the growth of crypto may spur a novel world order. According to him, the primary reason might be that digital assets are now more accepted and have more use cases than in the previous bear market cycles. Coming back to data, Blockware Solutions, a blockchain infrastructure and Bitcoin mining firm, has released a report analyzing the pace of Bitcoin's adoption and what to expect going forwards. The firm's analysis calls for a minimum of 1 billion Bitcoin users, with a predicted 10% of the world using the network by 2030. The Blockware report predicts that Bitcoin will be adopted faster than such past technologies. The team expects 10% of the globe to be on board the network within just 8 years. Blockware's lead insights analyst Will Clement broke down his team's predictions in an interview with Anthony Pompliano on Thursday. He said, "Where we think Bitcoin adoption is, I think we're getting ready to hit the main S-curve of adoption. Furthermore, as the network is growing on the rails of the internet and comes with baked-in monetary incentives, its network effects are expected to be exceptional." The report also argues that user adoption directly influences Bitcoin's price in a positive way. At the moment, the number of active users of the Bitcoin network is estimated to be about 0.36% of the global population. Blockware analyst Mitch Askew said he expected global adoption to be higher, but finds the lower-than-expected figure incredibly bullish. And then Will Clement said, "You've got this network effect that continues chugging along and growing exponentially, and then at some point, you're gonna have some type of event that releases that valve up." Coming back to Doge, it got absolutely butchered in today's trading session. Currently, it's trading at around 6.5 cents, which is around 90% lower than its all-time highs. All I have to say about this is that Doge needs to go down in order to see another round of recovery. Overall, I'm still bullish in the long term. In any case, let me know where you think we're heading from here in the comments section below.